Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, April 10th. Hope you guys have some good open weekend plans here. Not much going on today. We got the import price index, a very mild one. Ain't nothing that's going to make the markets move. But as you can see here, back in February, we had a 0.2% increase in the import price. And in March, it contracted to negative 0.2 as the forecast and actually exceeded that at 0.3%. This is mostly because cost of goods coming from overseas is getting cheaper for the U.S. primarily because of the strength of the dollar, so we're able to buy more coming in. But on the other side, when you get the export, it's going to be more difficult. So that's something of concern more to the investors, primarily because if we want to try to keep our manufacturing or our services overseas, it's going to be more difficult as especially when a lot of countries are struggling financially and to be able to afford to purchase those as the cost would be more expensive for them with the weaker currencies on their side and the stronger dollar here. Let's go ahead and take a look here. Current stock market is currently up. It looks like it's going to be up for the week. It's taking its cue more from corporate news and earnings from like GE and some restructuring that's going to go on. And then also there's some Fed speak going out there. We had Coca Lakota out of Minneapolis talking. He's a non-voting member. We also have a voting member out of Richmond, Fed member Mr. Lacker, and he kind of reiterated how he thinks the Fed should go ahead and continue raising interest rates as soon as June. So he's one of the members who are more hawkish and want to go ahead and proceed with rate hikes in June, beginning in June. Now, keep in mind, when the Fed had their last meeting, they didn't have the data that we had for the new jobs reports. Now, when the next one comes around, they'll probably have two jobs reports. With the weekly jobless claims we had yesterday, it could cloud it up a little bit that maybe it was aberration. With the low jobs numbers, that maybe jobs will get a little bit better. It was under 300. And maybe jobs will get a little bit better, and the economy will be moving a little ahead, which will in turn go ahead and raise interest rates. So it's clouding the future a little bit as to this what they view as to where rates when it will be done. Most likely, at the earliest, will probably be September versus June, as they want to probably wait a little bit longer to kind of make sure that they're not going to shoot themselves in the foot, so to speak, where inflation's going lower and jobs aren't being created as they'd like to see. So we'll have to wait and see. Bond market today, it's been kind of fluctuating a little bit today, so depending on when lenders come out with the pricing, we are better than where we ended the day yesterday. We ended the day at 102.08. We're currently at about 102.12 right now. So we're up a little bit, but we have been fluctuating between 102.10 and 102.18. So if the East Coast, it's up, so they'll probably have better pricing, but the West Coast will probably have a little worse because it was at 102.18 and it dropped down to 102.12, so probably they would show a little bit worse pricing coming out so far today, just to be on the conservative side. So they don't like to, they'd rather give you better pricing later on if the market improves, but in case pricing gets worse, they don't want to be, of course, hurt themselves a little bit. So keep that in mind. So most likely you're going to see pricing a little bit worse here on the West Coast, especially here in interest rates in California compared to where we were yesterday. All right, folks. Hey, you guys have a wonderful weekend coming up. I will look forward to see you guys on Monday, and thanks so much for watching. Take care.